Welcome back to the course. In this video, I'm going to take a look at FOMO. It's an acronym you hear a lot in the trading world, the fear of missing out. One of the greatest ways to lose money in the financial markets is to chase a trade after it's taken off. There are a lot of different expressions used to describe this behavior, essentially revolving around the fear of missing out. Sometimes you can hear it chasing the trade, something to that effect. This is very common to see amongst bubbles, and you can see this bubble here. This was Bitcoin. Everybody went crazy here for about a year and bid it up to just below 20,000. And you can see that since then, it's really gotten brutalized. As markets continue to climb, the one thing that you have to keep in mind is the so-called smart money got in when it was cheap. And even then, it was 4,000. But there are people who, in the Bitcoin world, got in at 10 cents. When markets go parabolic like this, the smart money dumps it off to people who have the fear of missing out on this trade. They actually buy hype, and they believe that the market's going to go up forever. And you can see that clearly hasn't been the case. And if you have bought Bitcoin anywhere past this level, you're now losing money. And that's very typical with bubbles. But it doesn't even have to be a bubble. It can just be a strong move. I mean, keep in mind that even if this market did continue to go higher, it needed to pull back. You just can't keep up that kind of momentum. Unfortunately, though, this happens to many traders. They just see this and they watch it and they wait for a pullback and they wait for a pullback and they don't really get it and they can't stand it and then eventually have to get involved. And that's the fear of missing out. And it takes over, and it's a great way to lose money. It's short-term thinking because, one way to look at this is you have to keep in mind it's an auction. So in this case, we're auctioning, how much are you willing to pay for Bitcoin? Think about going to the store. If you go to the store and you buy a loaf of bread, are you going to pay 2 times the cost of bread? Or if it's on sale, are you going to buy a couple just because it's cheap? It's a better trade. It's your money for that good. Same exact thing you're looking at here. And now you're starting to see the results of this. There are a lot of people who got in up here. Retail traders, and a lot of times they're small positions, but they're wiped out half, and if they have any leverage whatsoever involved, they're in real trouble. So let the market come back to you. Think of it as an auction. You have to find value. If you can't, if you see a trend like this and you start getting involved, you are going to pay too much. Pullbacks, and this could be the bottom. Maybe they continue to go higher, but what would you feel more comfortable with? Owning Bitcoin at, say, 8,200 or something, or at 17,000. Obviously, the profit, and that's assuming we go higher, would be much higher from here than it is here. There was no point in chasing it when it went this far.